Hey guys, this is Trading Bruce from Simpler Trading, and I've got a great video for you. I'm trying to keep this short, but if you've been watching this market, we've got a lot of volatility going on, and I'm going to show you how to take advantage of it or to hedge your portfolio in the event we keep going down. So first, let's jump in and I'll set a backdrop as far as what I'm looking at, what we're going to try to do. So I've got the ES up here. This is a daily chart of the ES. As you can see, one day chart here. Last night, the light gray's overnight session. So last night in the futures market, we hit 7029 and everything was going great. I was watching this last night and it was going up. Everything looked great. And then we got the big flush at the open and it just didn't stop. We've got this is a voodoo skyline, went right through that all the way down to 6898. So 125 point drop, whatever. And it looked pretty sketchy at that point. I was not expecting this much weakness, and we did kind of claw our way back here and kind of caught our breath, and we managed to kind of rally and get the bulk of that sell-off back intraday. But let's take a deeper look at this. Let's look at a 5-day chart, and you can see here's where we were 5 days ago, and we went below that and now came back up. So we're kind of where we were roughly 5 days ago, with a lot of wild swings. Again, that's what made me put this video together and to put together a hedge for you guys. So let's continue that thought process. Let's go back 20 days, and as you can see, we're kind of sort of in the same place. 20 days is about the length of the trading days in an average month, but wild swings all the way up here, all the way back down, all the way up, all the way back down here. So what am I expecting? So if we go out, this again, I'm going to stick with the ES for a minute. If you look at this, that green line is a voodoo tree line up there at about 7100, and I've been targeting that for a little while now. You can see we got close here. We just keep trying and just have not been able to, to get up there. And I don't know, but we're gonna solve it today. So let me switch this. I'm going to switch this to SPX because that's what I want to set a trade up, is an SPX. And you can see our voodoo tree line up there is at 7064. All right, now I'm going to keep this very, very simple and easy. We're going to put this back on simple moving averages. So as you can see, and I've got my drawing tool on this monitor, so I keep looking over here. That's a 50-day moving average. That's a 20-day moving average. That's 100. And in between here, you have a 34, and then you have a 100 in here. But I'm going to keep it really simple. So this chart looks great. And if you notice a little subtlety here, you see how we're going parabolic here, and then we're kind of starting to flatline here, right? And this is, I'm sure you are aware, the sector rotation's been coming out of SPX, the Mag 7 is going into the other 493 stocks of the S&P 500. So we've kind of flatlined here a little bit, and maybe I can do a video on that other of the variation in between the two, because the S&P, the Mag 7s are much more heavily weighted, make up about 40% roughly of the S&P 500 weighting. So anyway, if we look here, and you can see we kind of flushed down there, there's the 50-day moving average. I think we're vulnerable here to the downside. Honestly, I think we could come back. Now, I'm not thinking, this is a 200-day, I don't even think we get that far. I'm not thinking black swan, this is not over, that kind of thing. But we had, all the big name earnings this week. We had Microsoft, Tesla. We had Apple today after the close. Lam Research, Boeing, IBM, big barometer for the economy. United Health. There's a lot, a lot. We're getting pretty deep into earnings season right now. We'll have more next week. We've got Palantir, we've got Amazon, we've got Google. Who else? Rambus, Merck, Eli Lilly. Anyway, big names next week as well. Are they going to carry the weight and keep us moving higher? Maybe. But in addition to all that, we had Fed meeting yesterday, and I thought that we would get some confidence out of that Fed meeting to push us a little higher, and we really did not. So the market feels weak. It feels heavy, although we're at new all-time, pushing new all-time highs and all that stuff, that's a good thing. But you know, I'm wondering what the catalyst is going to be, to take us up to the next leg higher here. So let's look at a chart. So do a little more digging. And these are Fibonacci levels, if you're not familiar with that. I use them, a critical part of my trading, and again, keep it very simple here. Excuse me. SPX on a daily. Now we've already taken out target 1. We've got smaller target 2 up there at 7016. And this is where we are right now. About 7,000 OL. This was actually done a couple days ago. It's still in force. Basically what this is showing us is that we've got timing for a high. The way timing works is there's a series of sequences that when they overlap say that you are in a position to have a timing for a high. It's exactly what happened where this is February 29th, or excuse me, that actually is supposed to say January, but anyway, regardless, we have a lot of resistance above us here. That's going to be hard to get through. Now if we do, we'll have a smaller target. We'll have a larger target up here at 7100 SPX, and then even higher. But this is a lot of resistance that we have to get through, right? So, that coupled with my voodoo lines, the general weakness of the market makes me think that we might be in a place where we could consolidate a little bit. And again, I'm not thinking anything major, but how do we protect ourselves or take advantage of it? So what I want to do this January 29th, let's go out 1 week, because I think it can happen, very quickly. It's very hard to get an idea where we're going to be 3 months from now, but a week from now, 2 weeks from now, much easier to at least make some valid assumptions. So we're going to target next Friday, and we're going to use SPX. So how do we do that? First, we go over here to I'm on Thinkorswim, and this is Charles Schwab, Thinkorswim. If you're not familiar with this platform, let's go to 6 February, and I want to look over here at our expected move. Now, we closed at 6969 today. You see that says plus or minus. Now it could go up 123 or down 123. We're going to assume the market's going to be weak and we might go down. So we're going to subtract 123 from that, and that's going to get us to 68, basically 68.50, kind of roughly, which is right there. Again, we have to make some assumptions, right? Anytime you do a trade, you have to make assumptions. So we're going to assume 68.50. Now that gets us, if you're a Greek guy like me, that gets us to around a 23 delta, very reasonable that we would get there. So if you think about this, different, that's our time frame. That's kind of where we want to target on the downside. Not thinking about the upside, but we want to, since we're not sure, we could rip higher, and I don't want to risk too much money. I want to make it as get the most bang for the buck and the most user friendly that we can on the upside. I do normally like to use calendars and diagonals, things like that. We could use a simple debit spread, but I think in this situation, because we do have a fairly specific target, I think we can use a butterfly, and that'll give us the most bang for the buck. So I've already got the trade set up over here. Let me drag this over. So if we use a broken wing butterfly like this, we're going to target 68.50 for next week. This is a analyze tab is what this is called. If you're not familiar with this, super cool, very helpful. I've done a lot of videos on this in the past. Let me know if I can help you with it. This shows our Greeks, delta, gamma, theta, vega. Don't have to worry about that right now. But we're going to target 6 February. That's next Friday. And next Friday, by the way, we have payrolls on Friday. And again, we have Amazon, Google, Palantir, lots of names coming out next week. So 123 points down gets us to there, right? And we want to do this in the most cost-effective way we can. Now this is a broken wing butterfly, and I'll show you the difference. If we do a regular butterfly, we would go 67.50, 68.50, 69.50, 100 points, 100 points wide, 67.50, 68.50, 100 points, 68 to 69.50. It's a $12 trade. Gives you a lot of bang for the buck and all that kind of stuff, but why is my trade only $4? Well, very easy. I did a slight tweak to it, and I dropped, excuse me, I dropped this 69.50 down to 69.25 and simply made this a broken wing butterfly. Nothing complicated about it. I just chose a different strike. You can play around with these and get variations in the price. So check this out. We use one contract. When I'm posting this stuff online, I don't know what size accounts everybody has or trading, and again, I have to disclose this. It's not investment advice. It's just a concept, right? We're looking at, right? So if we use one contract and we pay $4.25, that's kind of where it looks like it should be in the morning, roughly. So we risk $425. That's it. $425. Now what's our max profit? Well, there's $1,000, $2,000, $3,000, $4,000, $5,000, $6,000, $7,000 of max profit. What's 7,000 divided by 425? It's about 16x on your money. If we were to get that. Now that is on a pin. If we end up next Friday, closing bell, ding, 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 at 68.50, you'd make about $7,000 on your $400 investment. Pretty good, right? Not too bad. But wait, there's more. It gets better, right? The cool thing about this trade, the way I've structured it, you see how the T+1 line, this pink line, sorry, the T+1 line, if you don't know, this pink line is our what's called T+1 line. Each and every day, this line goes up a little bit, and it goes up a little bit more, and it goes up a little bit more, up a little bit more, and up a little bit more, right? Until the end of the trade. So we have the ability, if we get there early, to make money. Ideally, you want to get there kind of later in the trade because your max profit is at the end of the trade on a butterfly, right? So let me show you. I'll fast forward this thing. If we use our calendar here, and I'm going to fast forward. I'm just going to go to next Wednesday right here on the 4th. And as you can see, this pink line goes up, and I'll drag my cursor across it, and you can see 300, 400, 500, 900, 1,000, whatever. So if we get to 68.50 on next Wednesday, this trade will be worth about $1,100. I mean, we could stay or we could go. We could take the money and high five, move on, or we could hang around and wait. Again, the later you wait in the trade, I'll just do it out here to Friday. It won't go all the way to the expiration, but as you can see, it goes up, up, up. Right, this T+1 line is like this today, and then it goes like this, and then it ends up filling in this thing. The green line is at expiration on the last day of the trade. So again, the cool thing about this is very simple. We don't have any management on this trade. Basically what we'll do, if we go up, now notice over here, that number's right there, see 2.7, this trade expires on 2.6, 2.7 is a Saturday, basically when it settles. Don't worry about that. But basically over here, if you look, $425 again is all we got to risk. So if we go ripping higher next week, you know what? It didn't work. Cost me $425. We can get creative if we wanted to, and we could do all kind of creative stuff up here. I'm not that worried about the $425. I try to keep these trades to a $500 risk, $1,000 risk, whatever. Now again, if you're trading a larger account, look at this. What if you're trading $1 million account, whatever, big account, $500,000 account, $250,000 account, whatever. Now you're going to risk $21,000 to make $350,000. That's pretty good. $20,000 to make $350, right? Does take a little margin. Be aware of that. But anyway, you can size this up any way you want to. All right. And since I am using puts and it is broken wing, it does take a little margin. Not worried about that. That's just part of trading, right? And this is only for a very limited time. So no management, no trade management on the upside. On the downside, I don't want you to let it get past that point right there. That's the edge of your butterfly. And if it's going down, there is a possibility if the market just starts free falling and we really break to the downside, we could overshoot this thing. We don't want to do that. So we will, in any case, we will pull the plug as it's coming down. And I would go so far as to say, if you get to 68.50 early, start getting ready to pull the plug and get out somewhere here. Now you should still be at a profit at that point. Let me hover the little mouse over here and see you're still at, on one contract, you're still at $100 profit, $70 profit. You won't be at a loss until you get outside the body of the butterfly here. Now notice, we do have one thing to be aware of. This is your sea of death over here. This is pretty deep. You're getting that because we're literally taking the risk off this side and we're throwing it over on this side. So you do have more risk over here. And that is about $2,900 of risk. Again, we're not going to let it go past there. So that's, to me, is not really an issue. And even if it did, you see the pink line there? We're down $400, we're down $500, whatever. When we pull the plug, it didn't work, whatever. That is the risk. There is no trading without risk, right? Especially a opportunity, risk reward opportunity of this magnitude where you're getting 16 times your money. Again, that's max profit. I know some people will say, well, that's, yes, it does have to pin there at the close on a Friday, but there's a lot of money in a lot of this butterfly, and it's pretty wide too. So as you can see, the black part here and the light gray part is the expected move. So that is a big wide net we're throwing here to try to catch a move on the downside, and this is a very there's very a lot of bang for the buck and low cost on this trade. So again, with that, I wanted to walk you through that. If I can help you with this, let me know. I'm at Simpler Trading, of course, and I run a trade service called Bias, and we'll put a link down here to the Bias, get you a free trial if you want to come in there, ask me any questions you want to. We do this kind of stuff all the time, but I'm looking at the market. I'm thinking it's pretty weak. I'm thinking that this might be good. I already have a couple little hedges on as well. So again, with that, let me know if I can help you. If this concept is new to you and you're not sure how it works and all that kind of stuff, do this in a paper trading account, see how it works, try it out. You can vary the width of the strikes, you can vary the time, how far out in time you go. I'll keep these ideas coming. I'm trying to post them very often, but with that, let me wind it up. Let me know if I can help. Hope this makes sense, and good trading out there. Be careful. It's going to be volatile the next couple of weeks. Thanks. Take care.